Welcome back to the second segment of Capital Market this evening. Join us on Twitter if you've got some comments to throw at us on this conversation we're having at Channels TV and at CTV Temple. Now, Jide Sholanke, who is the head of investment analyst at FSDH Securities, is still right here with us, and together we're looking at those events that have shaped the market in the month of May and the kind of trajectory that we've begun to see in the Nigerian stock market in recent times. Now, this week we got a report from MSCI increasing the weighting on Nigerian stocks quoted on that market. Give us a sense of what this means for Nigerian equities.
Positive, and that, even extends the argument that I was trying to make in terms of, we saw about $300 million come to the Nigerian economy in terms of portfolio investment in equities in Q1 2017. And, the MSCI, with the Morgan Stanley Composite Index, which has Nigeria in it, which Nigeria has been increased in terms of our proportion, that index has been increased. It's still consequent upon the fact that we have a more stable exchange rate system. We have more foreign external reserve that can use to defend the naira, and foreign portfolio investors are assured increasingly that they can bring in their money and take out their money. So that is a big solution. That is a big boost, for the equity market. We expect that to continue to increase in terms of attracting, more investment from abroad. And for all you care, MCS, the Goldman Sterling MSCI, is an index used by global fund managers, global portfolio investors that are resident, of having offices in Tokyo, in New York, and London, and Frankfurt, and they look at this index, and with Nigeria being increased, which shows that there's a confidence in the Nigerian equity market, and look at the component of the stocks involved in that MSCI, very heavyweight stocks, heavy cap stocks that are fully almost representative of the Nigerian equities market.
So does this send a kind of positive signal to the fact that we could actually get back to JP Morgan index?
Well, the JP Morgan index is a different index in terms of the bond market index.
Yeah, bond market. Of course. We're talking about the sentiment, the confidence that this MSCI weighting has brought back to
not
the
even the confidence of the MSCI. The confidence is arising from an increasing strength of the naira in terms of going forward. In terms of, because the fact that one of the reasons why we're excluded from the Barclays bond index and the JP Morgan bond index was because of this issue of foreign exchange repatriation, capital repatriation, profit repatriation. In terms of, if we bring in our money, there's no assurance that when we need it to convert to dollar to repatriate our dividend and our capital, we'll be able to have it. So as we have increasing naira reserve, stable naira, then we should have increasingly JP Morgan can put us back.
Because there's so many issues that actually we've seen in the markets this week. The PMI came in and it was also positive. Yes. What does that mean for consumer goods, the industrial sector, as well as conglomerates?
That's another good news and another positive news. In the sense that the PMI, the Purchasing Managers Index, is a leading indicator in the system, in the economy, in the sense that it indicates to all, it shows us a part of the direction of the economy and of the magnitude that we can expect at the end of the year. The PMI too has suffered, before it began to increase for the past 2 months, because from the same problem, from inability of producers, of manufacturers in Nigeria and non-manufacturing companies to access dollar, to access dollar to purchase input into the manufacturing process and into the business processes, and that scarcity has been reduced. As you can see, the central bank is creating an alternative window for importers and end users. The central bank has more war chests to be able to defend. Because we must understand something: our production and consumption pattern in Nigeria is significantly linked to the exchange rate. In terms that we import a lot of input and we consume a lot of imported goods.
So now, still talking about consumption and consumer goods and industrial sector stocks anyways, May and Baker had a very, very good news this week on from the Nigerian Stock Exchange at the FEC meeting, the FEC meeting that took place at the Federal Executive Council meeting. And that's that the company will begin to produce vaccines for the nation, with over 2 billion naira to be invested in that company. Talk to us about the kind of price movements that we've seen on this stock. In this week alone, it has really, really moved well.
I'm happy for May and Baker. It's a stock that we've been following at my firm for a long time. I've visited the factory, visited the company, talked to them a lot about this thing, even previously, about 2-3 years ago. In 2014, the company was able to get a very important element that would drive its sales and drive its revenue, which is called the WHO, the World Health Organization, the World Health Organization good manufacturing practices. And this pre-qualification is given by WHO to any pharmaceutical companies that is able to meet the practice and the standard of WHO. Mind you, the WHO spends about 20 billion naira in Nigeria, so providing goods, combating the pandemic that WHO is interested in, which includes tuberculosis, malaria, and others. And with that WHO GMP, achieved, by Meehan Baker, and thank God, it's been in the coming. The company has invested significantly in research and development, in technical competency, in processes, in human capital, and is reaping the fruit right now. It's not only Meehan Baker. I think Pharma and GSK too have such things. And the implication is that, the WHO funding, and assistance in improving global health standards, the funding and the drugs that they purchase, that they used to purchase from countries like South Africa, like Morocco and Uganda, will now be produced in Nigeria. And, and of course, the federal government partners with these institutions, and the federal government, of course, assessing these funds from the global institutions, is situating it with Meehan Baker. So it's a good thing, it's a positive for them. I respect the share price to continue to respond positively.
So you've explained why and how the federal government actually came about Meehan Baker. But we've also got other sectors, other companies under the healthcare sector of the NSA listed. Why the choice of Meehan Baker alone, apart from all of those credibility reasons that you've stated?
Well, I can't answer that. You'll have to speak with the federal government. I don't understand the decision why they made that, but I believe.
But we've got other companies that are actually qualified to take up this task.
I believe there will have been some selection process, for Meehan Baker to be chosen. I'm not privy to that, but I believe the federal government will have done its homework. Of course, I believe they will have interviewed all of them and talked with all of them, and all of them to submit bids. I believe Meehan Baker won based on the quality of the facilities they have.
So before I let you go, this is a new month. Today's the 3rd of June. It's entirely fresh. What's your outlook for the market in this month?
I believe it will still be positive. I expect some profit taking because significant profit has been made. Like you showed, 7.94%, about 17% year to date. 7.9% week on week, about 17% year to date. And of course, being the market what it is, people will take advantage of the capital appreciation and take profit, and smile to the bank and rent at some particular point in time. But going forward, a key element, that we should keep watching is that we have to watch oil production, we have to watch the OPEC and non-OPEC compliance. Good enough, they've extended it to March 2018 in terms of oil cut output. So if these two elements work together and we continue to have exchange rate stability, mind you, as I opened up my argument, my responses to your questions, I said that the stability and the path, sustainable growth of the equity market is consequent upon exchange rate stability given the size and the economic model Nigerian practices. So once we can assure, once foreign portfolio investors can be assured that there won't be some kind of knee-jerk demand management policy of the central bank to manage exchange rate, we will continue to see renewed interest in the Nigerian equity market. Hopefully, we'll begin to go beyond 30,000 psychological level, like you mentioned, and go back to historical level about 50,000. It appears as if it's a good time for the equity market, basically.
Okay, so we've actually seen enough shifts between from the debt markets now to the equity markets. Of course, whenever the economy is booming, we see shifts from we see these shifts dramatically. Give us a sense of what we are likely to be seeing going forward. This is going to be the end of the first half of the year.
I didn't get that question, sorry.
Okay, so we've seen that investors are moving away from bonds, but we've seen more sentiments around T-bills. Okay. Now to equities. Why is it like that? How long are we going to be seeing this?
Well, how long we'll be seeing that, I cannot tell you precisely. We're going to see it for a couple of months more, going down the line. It's not abnormal for us to see this because the equity market and the bond market are traditional alternatives in the sense of traditional competitors, for spending and for investment, from investors. Of course, if the equity market is doing well, the bond market will not do well. If the bond market is doing well, the equity market will not be doing well. Well, the bond market suffers because of macroeconomic activities and particularly rising inflation rate and risk in the environment. So people want to lock in the assets and risk-free assets and take advantage of a secured return in terms of the government not being able to default. Yeah. And equity market being more risky in case you can lose all your risk. So as risk begin to wane and risk attraction and risk aversion begins to wane, you begin to see return to the equity market. And all the risk factors, the macroeconomic risks, like I mentioned, are waning. And as they wane, you begin to see people less risk averse and going back to equities. All
right, thank you very much, Jide Osholonke, investment analyst with FSDH Securities. It's really, really good to have you again on the program. Thanks so much.
You're welcome.
And that's all the time we've got again on Capital Markets this weekend. Thank you so much for being a part of it. I'm Temple Ashaju. I'll see you next time.